Everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feed. You can also enter comments in the chat room for me to answer at a later date. And I do want to remind you that we have a StockCharts membership special that ends on Monday. So try not to forget that, because that can save you a whack of dough. So let's jump into the charts. Okay, the main problem with the bull market is it's uphill all the way, and that seems to be apparent as we're working through this trading, or not through the trading issues, through the the China tariffs and the trade agreements around the world. So today is options expiration day, so that makes me a little nervous. Breadth charts are making me really nervous. The 5-year bond chart that I had trouble displaying on Wednesday, I just still do not know what happened there, but I've got it under control this week or today. The international markets continue to be just hanging on by a thread, so we're going to talk about those. And the PPO, I want to talk a little bit more about that indicator because it's starting to set up on the Russell, the German market, and Japan. And the US dollar is breaking out. The British pound looks like it's breaking down, and the Aussie dollar did break down, and the yen looks like it wants to break out. So lots of currency moves, really big stuff on that. So needless to say, we won't get it all covered in a half-hour show today, but we will get most of it covered. And then on my market roundup for the weekend, which gets posted on Saturday night to YouTube, so you can check it out on anytime on Sunday. So just to make sure everybody's aware of that. Okay, so why is Greg so nervous about the breadth charts? So one of the things that we have going on, first of all, we've got this low. This is the Nasdaq Composite here, and we're bouncing up. And you can see that the advanced decline line, this is just an 11-period moving average. And what we have is a bounce back up, but we literally didn't get back above zero. And I've drawn this orange trend line in here. So this red trend line was a little steeper than the previous two, but this orange one is plenty flat, just to use as a reference tool for the market. Oops, that's not what I wanted. So let's go get my, and there we go. So the point is now this slope is a lot closer to the previous slopes where the market broke down. So we literally broke through that slope, and now we're trying to hold on to it. So we're at a pretty important inflection point on the very short term. Fully agree with that. But again, the bigger picture that I'm worried about is that we haven't had any net new highs showing up here. And we had a brief rally, and now it's pulling back again. So we saw this back in 2015 when the market just kind of stalled here. And so this market continues to stagnate. So here's the 11-period moving average for the New York Composite, and you can see this downtrend in momentum, and we're already pulled back here down to 27. This is 250 or so up here. The uptrend in the advanced decline line is breaking again. And for the high lows, we had a nice surge. I will point out that it's not uncommon for us to get a dip below and then a surge back to the top of the range. That does happen quite often. You can see back in this period here, April to July or whatever, in 2015, we basically couldn't get above this 100 level, briefly did, and then let go. So I feel like we're building this same sort of topping structure here. And again, for the New York Composite, it's always the weakest market, but it looks to me like it wants to roll over. This is the Alexander Elder method of looking at net new highs, and he just does a 5-day total. But what you can see here is we've got this brief dip into the red, and the real question is, does it accelerate from here? It's really important that it does. If we started to break down now, I get the feeling that we're going to break down hard. This is kind of the lowest bumps we've had in the last couple of years. So this is not really a place to be comfortable, just because we didn't get a lot of breadth on the last bounces. Okay. One of the things I like to keep track of is the summation index, and I always put market below 400 usually, or moves below 400 on the summation index usually creates market pullback. And you can see we were back here in 2018 and dipped below. But we do have some pretty good dips where we've come off really high levels and fallen down. In 2016, heading into the November election was just one of those. And I don't know if you remember, but that was roughly a 15% pullback or something. And we were all a little bit concerned, especially as we were trying to take out the prior highs. So this can give us a sharp move down. And we also saw this back in 2009, where after a huge surge up, we had this big whipsaw right in here, and it looked like the market was going to break down, and onward and upward it went. So I don't get the feeling we're anywhere near a 2009 low. I don't think this was one of those. But I do feel like the topping structure is still coming in here. So this summation index, it could, you know, if it starts to let go here, and you can see it's literally streaming down now, that'll be important to watch. Now, this is updated end of day, so we'll keep track of it. One of the things that I hope I've been able to communicate is how important the breadth is for both the Nasdaq and the New York Composite, and then we'll get into specifically the Nasdaq 100 and the S&P 500. So here's the Nasdaq Composite, and the point I want to make here is this 55% level was friction, and now we're starting to break back down here. Now the question is, are we like in early 2016 at the start of the rally, or are we more like 2007 where we're at the end of the rally? So we had a deep pullback come up and then couldn't get much more bounce and fall apart. One of the concerns I have is that the percentage of stocks above the 200-day moving average barely got to 50%. And I've mentioned this multiple times. Like, after these deep pullbacks, you really want to see this thing kind of rock and roll to the upside. And I don't get the feeling that's what the setup is right here. I get the feeling we're more like this either October 2007 or the May highs in 2008. So that's what I'm worried about on the NASDAQ. We also saw this level kind of fail back in 2002 as we headed to the final lows late that year. So the fact that we didn't get a lot of breadth, like the number of stocks that went on a buy signal on a PNF chart was only 55%, which if you look across here, that's really, really low. And even in 2015, we got up to 60% for a couple of months. And in 2006, going into 2007, we were up here and stayed kind of above this green line at 55% before this started to break down. So I'm not very happy about the bounce here. It's frustrating so far because I don't see the breadth coming in on the new highs or on the percentage of stocks above the 200-day or on the bullish percent index. So let me go to the Nasdaq or to the New York Composite. So we'll do the composites first and then come back to the two specific indexes. So here's the bullish percent for the New York Composite. And what we see here is we're at 55% again. And this indicator topped out around 60%. And you can see that the whole rally through 2018, that's all we got. And again, now we're working on the bottom side. This is kind of where it broke away in October. And so I'm a little bit worried because we're starting to make lower lows here. So this is if I was to pick a line in the sand, we're at it. We're literally at the point where this market has to hold up, or I have this feeling we're going to do this October 2015 move back down sharply. You saw the same thing back here in 2007 and 8, where we bounce off this level and can't get enough thrust going higher. So again, really concerning that we didn't get our breadth way up in the high area. Now, when we look at the percentage of stocks above the 200-day moving average, right around this 60% level is kind of where we topped out in 07, where we topped out in 2015. And you can see we were up here for 3 or 4 or 5 weeks, but couldn't continue. And a big bull market usually gets way up here into the 80% level on these indexes for us to start the rally out of the hole. And then that's what keeps us going. So here in 2003, you can see this big vertical move, and I feel like we've stalled here and now rolled over. So we're at 55%. But the bigger issue is that we didn't get more breadth to begin with. And in general, it's, we've already lost 10% here. 10% of the stocks have already fallen back below their 200-day moving average, and getting below 50, obviously, when more than half of the stocks are below their 200-day moving average, it's a pretty weak environment. Okay, so let's go back to the Nasdaq Composite, or the Nasdaq 100. And the reason I want to talk specifically about that group is because obviously the tech stocks have led the party, and they're kind of one of the biggest areas to be aware of. So this is the Nasdaq 100 in the top frame here. This is the bullish percent index. So again, 100 stocks, and we're just keeping track of whether they're on a buy signal or a sell signal. And the way you get a buy signal or a sell signal is it actually has to make a lower low in order to get on a sell signal. And so since April 1st, so kind of 6 weeks ago, we've already been from 82% down to 54% of the stocks are still on a buy signal. That's a massive swing. Like 25% of the stocks have started to fail there. And again, off this big bounce off the low, I would have expected, a lot more strength here. And now we're at 65% of the stocks are above their 200-day moving average, and it looks to me like this wants to go lower. So, over the last couple of weeks, it's dropped. Remember, we had a tough start earlier in the week. So one of the things we need to keep watching for is how bad is this going to react. And again, looking back left on the chart, these big spires don't up around this level that come from a deeply oversold condition. You want them to stay up here for a long time. And in 07, they did, early 07, but late in 07 and 08, they really had trouble. So that's what I'm worried about, is we don't have the percentage of stocks above the 200 days should be up in a nice frothy environment, and we're not getting that. We're kind of stuck in the middle. Now, maybe we just moderate sideways like we did in 06 and 07. I don't get the feeling that's the case because of the rest of the world. Okay, and now here's the S&P 500, and this one is quite funny because the percentage of stocks above the 200-day moving average is 61.8, which just happens to be that famous Fibonacci number. Anyway, you can see that the bullish percent index is not holding above my lower level, and it's already below where we broke down in September 2018. So this is really starting to look very weak, and this sudden drop is quite concerning. Now, maybe we get some sort of a bounce like this, but my shock or my surprise is that with all of this bullish enthusiasm, we went on to take out a new high, just a couple weeks ago. And what's happened is we've already lost this bullish percent from 79 to 59. So 20% of the stocks have gone to a sell signal, not just pulled back from their high, but they're actually on a sell signal. And the percentage of stocks above the 200-day moving average has dropped to 60. Now, we have a little bit more room here. When it starts to fall below 60%, that's pretty low, and we're at 61.8. And I'll move this green line for my market roundup tomorrow because that'll be a Friday close. But in essence, this is looking very, very weak, and we need that to pick up. Now, again, just trying to stay aware of those situations is pretty important. So one of the other things that I like to keep track of is options expiration, and today is one of those. So it gets a red line. And why does it get a red line? Well, these blue lines are quadruple witching, which means quarterly options expirations also expire. And the red lines, this one in April here is what I call an earnings one because it comes out January, April, July, and October. So these are the options expiration that happen during earnings. And this one is kind of one that doesn't happen during earnings. But you can see this uptrend in the S&P is breaking, and we're right on this level. Pretty important place. And we had kind of the same thing back in October where We pulled back into early October, got to options expiration, then the market fell away, couldn't rally much, tried again and again, and then fell down hard. So my concern is that we didn't get any breadth, and the buying interest was a lot lower this week. This volume is for the S&P up top here. We were well below average volume, and the volume had been declining. So a little bit concerned after a couple of solid days of selling that we didn't get more action. And again, Monday was our big kind of spike low here. So we need to be aware that we've tried to rally off the lows, but we're barely back to where we were, late last week. So we've spent a whole week trying to rally and haven't made much of it. So that's somewhat concerning. Now, the next thing that I want to point out here is the Nasdaq Composite has broken its uptrend compared to the S&P 500. I consider that worrisome. And the daily PPO is down at 0. So if we don't get a rally here and we start to get more selling, like today as an example, we'll see where we end up, because I think it's a really critical day on the charts. If this starts to roll over here, I'd be not happy at all. Again, that would kind of confirm our double top on the Nasdaq, and then a brief rally up, and then if we were to fall away here, that would be kind of critical. So watching this PPO very closely. This is the weakest it's been since really from the top side breaking down since last October was when we got down to 0. We're there now. So it's a pretty critical place. And again, the charts are breaking like they were back in October in terms of relative strength. So that concerns me as well. If we go to the dashboard here, one of the things that I notice is the Russell is the weakest today. Then the Nasdaq is pretty weak. The S&P 500 is next strong, and the Dow is the strongest, which is okay. The biggest issue, though, is the real weakness on these two other indicators to start to see those fail. That's a big problem for me. So want to stay aware of what's leading and what's not leading, but having the Russell be very weak and the Nasdaq even not as weak as the Russell, but weaker than the two big indexes. Usually when the Nasdaq is underperforming, that's a cautionary note. Okay, so one of the when we go look at this relative strength line, we can see it breaking, so that's a concern to me. And again, it can wobble for a couple of weeks before it finally breaks down, but we're starting to see all kinds of signals like daily momentum drop to 0 and that kind of thing. Are we going to get this sort of price action, or do we just get another big rollover like we had in October? I don't know the answer to that. I just know that we're in a critical place on the chart from both a daily and a weekly perspective. So here's the Nasdaq 100, and again, the PPO has started to roll over here. We'll see where we finish today, but so far this week we're making lower lows and lower highs, which is usually what a downtrend means. And you can see up here to mark the top, we had an inside bar where we had a higher low and a lower high. We finished right near the top of the bar. The next week we dropped down. The next week we dropped down. So we're in this downtrend, and the real question is, will it stop, kind of like it did back in here, and start to rally? But the problem is we have all of the signs of trouble starting to show up, and again, the weakness is starting to appear. So, okay, so we have a brief little pullback. Well, my concern isn't the brief little pullback. My concern is big monthly picture charts like this that show the PPO on a monthly chart just getting to the signal level. And if it was to fail here, so we still have another 2 weeks to rally, but this is a really important location. We do not want this to touch and start to fall away, because it's already broken the 10-year uptrend line in momentum. So a brief touch here would be kind of like your final rally and a big rollover. So if I sound pessimistic, I'm really worried about this chart, and I'm really worried that it's one of the weaker ones. And so usually I like to watch the New York and the Nasdaq indexes, the broader indexes, to see what's going on. We might, it doesn't mean the S&P follows through, but it sure suggests if this is going to get that weak, that we should at least be cautionary. Now, again, there's a big uptrend on the Nasdaq Composite, and that would be concerning if that starts to break. Obviously, in October, or in December, we briefly dipped below that and rallied back up. But you can see over here in 2007, 2008, that we kind of rallied back up on the right-hand side and then fell away while this was declining. Well, we don't have that steep decline yet. And so the real question is, are we in the 2012 where the Fed kicks back in again and pulls us up, or does this actually roll over before the Fed gets more concerned? So looking at the Russell, one of the things that we noticed is that when the Russell started to make lower lows in relative strength, that's when the market really started to fall apart in September, October. And then we had the big breakdown in, I'll call it late November, and that pulled down. Then in March, the Russell started to check itself here right at the 200-day and started to roll over again. So we got 4 weeks of weakness. We rallied back up, tried to get through these prior highs, failed, and are now starting to check lower. If this Russell starts to make new relative strength lows, and it's very close today, we'll see how we end up the day. But if it's going to break down, that to me would be a very critical problem and something that we should all be aware of. So hopefully I've tried to outline the concern of what we're seeing. I do want to go look at this bond chart for you and just try to finish up that conversation that we had last week. And what happened in this bond chart right here. So the issue is that we had this trend line that we were sitting on, and we need to watch this to see where it finishes. And what we want to know is this going to break out? And you can see it was very close to breaking through this big downward sloping trend line. So as it's positioned right here on the line, this is not a place to be overly optimistic or pessimistic. It's a place that we should watch with a lot of importance, I think, because if the bond market's starting to signal a major change that goes back, 5 years, we need to know about that. Okay, the second thing I mentioned was currencies, or one of the other things I mentioned was currencies, and I just wanted to show you, here's the British pound, and you can see it's literally breaking down. So it's broken its kind of few-month uptrend, but we also have this 2017 low. So if we go to back to the weekly chart here, okay, we're sitting pretty much right on this line here. PPO rolling over right at zero. This suggests to me that this is going to head lower. Now the real question is, does it just come down and touch this uptrend in momentum, or does it actually bail? And I think if it bails here, that's a pretty important signature that we should be watching for. Okay, the Aussie dollar, just to pick another one here, you can see that we were trying to hold this major level of 70, and this week we clearly let go. It's literally imploding, and now we're testing the 2016 level. And if we roll this out to a few more days, so what this suggests to me is that the commodity weakness we're starting to see around the globe is a big deal, and this Aussie dollar chart breaking down is very problematic. And you can see the price of copper basically as a commodity tracks the currency pretty well, not exact, but tracks the currency pretty well. And this breakdown in the Aussie dollar, PPO rolling over below zero, says we have lots of problems here, and that this is probably going to break down harder. Okay. Here's the emerging market currencies, and maybe I should just start on the weekly. You can see this has rolled over. That's usually related to commodities and rest of world strength. We'd like to see emerging markets do better, and that would kind of tell us that the global move is afoot, and that would be good. We're almost at the point where this is rolling over below zero, which is a very weak place, and we usually would associate weakness in commodities with this weakness in emerging market currencies. So try and be aware just how weak these other markets are getting. Lastly, I just want to run down and go through the other world markets, and the only reason I want to bring these up again is because I think the weakness will start in the rest of world. And here's the Shanghai 25-year trend line. This chart will get updated. It rolled over below zero on the momentum. And so now what we want to know is, does it have enough strength to really get back into a positive phase, or does it roll right over? Okay, looking at the weekly chart, you can see that this is trying to have an inside week, but it ended up having a pretty bad day today, the Friday close in Shanghai. So this chart will update end of our day today, but as it updates, I think the issue here is it looks to me like the PPO is going to roll over and give us another sell signal, and that would be cautionary. For the Hang Seng, this is a couple of different looks at it. You can see that we had this kind of important level sitting here, call it 28.5 or whatever, but right around the tops in this chart. And now we have the 2018 top, and looks to me like we're rolling over and we're falling back below the 20-month moving average. Again, the 20-month is a pretty big deal. If the whole world is rolling over but below the 20-month, that's a problem. So here's the Hang Seng, and it had a bad day today as well. So it's going to pull back again from this little weekly blip. But look at the sell signal starting to show up on this chart. Pretty important inflection point to be aware of. So let's just stay focused on some of these foreign markets. They look pretty weak. The Nikkei is sitting right on my 21,000 level, and it actually rallied today. I don't know what caused the rally or what went on there, but it had a pretty big rally. So it's trying to hold this 21,000 level. I think that's critical, but you can see the blue monthly 20-month moving average is up around 22,000. We hit it, touched, and are starting to pull back. And again, usually when the Nikkei fails, that's kind of a cautious place on the chart. We saw this back in 2007. This was kind of one of the clues that the market was actually topping out. So far on the month, way back then, and now here we sit right at this lower boundary. If this chart continues to break away, I think it's a broader clue that we're in for bigger trouble. Let me just go, whoops, let me just go up to the DAX. And again, Germany's strongest economy in Europe, and we're sitting right at the 20-month moving average and trying to hold that. Now, Germany's having a down day today. I don't know if we'll finish down at 12.2, but these are monthly charts. We're mid-month, so it's too early to call what they're at. But I'm trying to outlay the situation where this is basically struggling at the same level as the left shoulder, and rolling over around the 20-month moving average is usually how you'd fail. Now you can clearly see we broke the uptrend and we're coming back down, and now we're trying to hold this here. So there's lots of reasons. The RSI is making lower highs here, and a 50 on a monthly chart is an important place. If this barely rallies above and starts to pull back, that would be a big problem for us. So I don't know if we're here or if we're here, but the real sort of place that I want to be cautious of is this 20-month moving average as we head into the next 2 weeks. And again, that would illustrate a much bigger weakness coming, and we'd want to stand aside for that. Okay. So all of those things add up to putting me on caution, big caution. Now the market is trying to rally through here, and that'll be important to see. I'm fine with the close up here. It's options expiration. I'm watching for next week to just see how the market handles this pullback we've had. And I get the feeling the global weakness is kind of going to weigh on the situation. So we'll continue to watch, though that's a big deal. So over the last month, this is the last 20 days, and the defensive side of the market has been leading. Communication services has been trying to rally a little bit. Even if I change this to 5, it becomes a problem where basically the defensive side is leading, and look at how underperforming the financials are. I think that's a big deal. Okay, remembering we have a stock chart special that expires Monday. Try not to forget that. And thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time, 7:30 Pacific.